Hello, everyone. Thank you for showing. Thank you for coming today. This is Christian Arce, and this is another episode of Real Estate Talk. We're gonna get today. We're gonna talk about real estate funding and how we can fund different ways that we can fund your real estate deals. So let me. I'm gonna get this ready, and we're gonna get started right now. So thank you everyone to for coming today, and thank you for the support. Thank you for if you're looking at this as in the repeat. Thank you for watching, and please send me any questions if you have any questions live. I'll try to respond to anything that you may ask. If not, I mean, if you're watching the replay, feel free to still post your questions either here on Facebook or on YouTube, and I will get back to you. Right? Okay, I'll respond any of your questions. Okay, so. Again, this is another episode of Real Estate Talk, and where I usually talk to other real estate investors. I talk to other lending institutions, or either friends of mine that are in the lending industry and the real estate industry. And I'm gonna make sure. Give me 1 second. I'm just gonna make sure that the sound is correctly. Yep. Yep. Everybody can hear me. So that's great. Thank you. And so what I was saying that, I usually talk to friends of mine from Facebook, usually that are in the real estate industry, in the lending industry. If you are watching this and you're like to join me one of these days and simply talk about your market and talk about, what is going on in your area, just to get a different feel, right? So the idea is to show other real estate investors and other people in the industry what's going on everywhere, right? And the idea is to show them a different perspective of, coming from a real person, right? Not just coming from the news. So my idea is to show directly from the source, right? From lenders, from brokers, and from real estate investors, to show everyone what's going on in the industry. It also is just to give you also different ideas and opinions, and also talk about lending. That's what I do, and that's one of the things that I do. Obviously, I've been investing also for the last 10 years, and I've been lucky enough to see the different ways that the market has behaved in the last 10 years, and how lending has changed, and how did it change in the last few months, right? I also went through the 2008 uh, crash. So obviously, we've been going through a couple of different changes in the last 15 years, right? So I just want to share that with everyone, and see if we can help anybody that is looking to start in real estate, or is already in real estate and looking for different solutions. Okay, so please, I will ask you to please like and share. And I'll appreciate that. And again, feel free to send me any questions, whether it's now live or in the recording. If you're watching the recording, and at the same time, if you're an expert in your area that you like to share what's going on in your area, and at the same time, you'd like to share who you are. And what you do, feel free to get in touch with me, and we can schedule to put you on Real Estate Talk to talk to us, okay, and to share your story. Again, please like and share, and let's get going. So I'm excited to talk to you today. Just about funding and how we can raise funding for your business. So we're gonna be talking about have my presentation right here. um, that I put a presentation together to show you a little bit about a couple of different loan programs that you can utilize for whether it's fix and flips or rentals or the program. And just to kind of give you a couple of different solutions. We're also going to be talking about business funding, unsecured funding, and we're going to be talking about term loans as well. So, which is those are unsecured loans. Unsecured loans is a big part of real estate investing, and if you haven't used them before, just stay in this webinar too, so you can see how we use it for our deals. Okay, so like I mentioned to you guys, I was in the lending industry for a long time before I started investing in real estate. And although I stopped practicing that when I started investing, I stayed in touch with the industry. I have a lot of friends they're still in the industry, and why? Mainly because we need to know what's going on on the lending industry. We need to be in touch with that. We need to learn more about that all the time. It keeps changing. Rules keep changing, and new programs come out, all programs go out, and that affects our deals constantly, right? So if you're looking to continuously add more properties to your portfolio, if you're growing your rental portfolio, or you're just starting to do that, or you're doing fix and flips, you're looking for quick flips or major renovations or even new constructions, um, whether they are on the residential side or the commercial side, they both have changed a lot in the last 10 years, right? So the flexibility of the lenders have changed a lot, and now obviously again in the last few months, right? So now we're living in a moment, obviously, that is making things very difficult for a lot of people. And for real estate investors are not different. So the idea, I think that sometimes sharing something new, some new information, it will definitely inspire someone out there to take some action in their business, or maybe give them some ideas to take a different direction, right? So my goal today is to reach out to those real estate investors, business owners, right? We're business owners too, that may need some direction, or some idea on how to get through these, or how to navigate this difficult time in the industry too. Even though I'm sure you heard a lot about what's going on in the industry. A lot of places, real estate has stayed very strong throughout the this whole pandemic thing, right? So actually, since the interest rate went down so much, a lot of people have come out to to buy, right? So in some areas, in some price ranges, realtors are saying and brokers are saying that their market are very strong, and they're very happy what's going on right now in their market. But at the same time, there are areas that they're not moving as much, right? And I've seen, you know, prices being cut off every week in some other areas, right? So it's just depending on where you are, is depending on the city, depending on what's going on in there, and what's going on with the pandemic, and protest and all that stuff, right? So obviously everything affects the way that we do business every day, right? So and obviously using this platform to help out is the best thing that we can have nowadays. I'm sure you've seen a lot of people out there giving information, and being live, and just showing what's going on, right? So but today we're going to focus first in real estate. We're going to talk about how we can apply some of the same principles to other business as well. But we're going to talk mainly about the real estate programs. Okay, so without further ado, let me go to my presentation, and I'm gonna show you what I got for you today. No, it's the other way around. Here it is. All right, let me put it in order. Um, and we're gonna get started. Okay, so I'm not gonna be able to look at my screen that much, so hopefully I'll be taking back and forth for any comments or questions. But either way, so I'm gonna move into the presentation here, and there we go. Let me see how that looks for you. Okay, that looks great. So the idea is to simply show you a little bit of an overview of of some of the programs that we work with and that we help real estate investors with. Okay, so loans are designed, our loans and our programs are designed obviously for the real estate investors in mind, with the real estate investors in mind. Our office is actually formed by real estate investors. Everyone or most of our the people that we work with in the office have invested in real estate. Some of us more than others, but most of us have been in the industry for at least 10 years. Okay, so some of the features will include on these loans competitive rates on individual property loans. There is no personal income required for these type of loans. Individual loans amounts that can go up to $1 million for single family or multifamily properties. The exposure for these limits for these loans for this type of funding are for multiple rehab projects. Okay, so you can do a couple different deals at the same time. And property loans are for single. It can be done for single family residence or multi units up to 20 units. We can do them. Okay, so using your own money versus financing is something that we always think about, right? So there is a lot of gurus out there that they teach you how to utilize other people's money, and that's fine. That's a great strategy, but at the same time, not everybody has that ability to get it right from the beginning, or sometimes they're not comfortable with it, and I think that financing now is a lot more flexible than what it used to be before. So there is more attainable for the new real estate investor, right? So, and again, I mean the maximum goal, right? The end goal of any real estate investor is to use your own money, right? Is to make enough capital on your fix and flips or your rentals that you're gonna to have that ability at the end of the day is to be able to buy with your own money and not to have to go to any institution, private lenders, or any bank to get financing for these deals, right? And I'm okay with that. I mean that's the end goal, and I think that all of us have that, and I think that at the same time we have to learn how to leverage other people's money, but at the same time financing institutions, right, or private companies that lend for these type of deals. So by knowing how to utilize them the best way is how you can get your things done, and at the same time be able to grow, right? So cash always, may not always be the best option when it comes to investing. So it comes with its own risk and unforeseen expenses. At the same time, even though you may have a good amount of cash, there is other expenses that you got to keep in mind that your company it will have every time you're doing a transaction, right? Whether it's a fix and flip or whether it's a rental, right? I'm going to talk a lot about fix and flip because that's where I where I feel comfortable. I've been concentrated on doing fix and flip for the last 10 years. So I can give you a great deal of information about that. So, but at the same time, when we do fix and flips, one of the main things that happen is that there is no cash flow when you're dealing with rentals. Yeah, the rentals are usually you buy the property, and depending whether you have to do something to the property or not, you definitely um, have you know that at certain point that property is going to start bringing some sort of cash flow, whether it's a little bit or a lot, but the idea is that 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 property is going to start bringing some cash flow. Okay, so now with fix and flip is not right. So it all depends on how fast you can get the project done, and how much of a work do you need to do. Okay, so financing property helps you to quickly jump into the next project, and even if you're still working on some of the other ones. So at the same time, when you can get financing for the next project and you haven't finished the first one, or you haven't sold the first one yet. So the idea is that you can use your own cash if you have to keep the thing working, keep your company working, keep your company moving, and the other project as well, while you get into the next project. Obviously, these type of strategy and fix and flips, and whether small fix and flips or large fix and flips, the idea is to always have a next project lined up once you're finished with the first one, right? So of course, you'll pay interest when you're financing, right? But that shouldn't equate too much into the deal, depending on the size, and depending on the timeline that you have for that particular project, right? But especially on short-term loans, when you do something on a short term, it shouldn't equate that much. So also, whether you need cash, these type of financing, short-term financing, can help you refinance or easily get some of your cash in advance. All right, so keep that in mind. So um, uh, sometimes you finish a project, and it's taking a little longer to sell than what thought in the beginning. We are able to refinance some of those projects and get you now some of your money out, and be able to keep moving. Okay, so keep that in mind. Short-term loans, bridge loans, those are perfect for that type of things. Okay, so once you're done with the project. Okay, so there's all other options to design for more experienced investors that we work with, to build your business and real estate investment portfolio. So the limits for experienced investors are based on investment property transaction history, right? So usually we look at the last 3 years, and we see how many properties have you done, how many properties have you been able to buy and finish and sell, and then based on that, we can set up a line of credit for you with an exposure up to $10 million. So the more experience you had in the past, the more comfortable we're going to be to give you that exposure, right? And to be able to give you that line, and can be any type of investments, right? So at least three we need, to three investment properties are required to in the last 36 months to be able to get into a line. If you don't have it now, that's okay. If you're a new investor, that's okay. I mean, once we get you there, we're going to be able to give you some extra options for your fix and flips. All right, and that includes flips, new construction, and rentals. Okay, so the relation is a relationship based pricing. Okay, the more experience you have, the more loans you do with us, the better your terms and your max your maximum limit. Okay, so we can start helping you increase that line of credit, so you can do more and more and more, and be able to get that ball rolling on in that pipeline going. Okay, so what is the exposure limit? The exposure is individual and business approval that allows investor to fund multiple rehabs. All right, so up to the approved limit. So it means that obviously the depending on the approval amount, you're going to be able to do multiple deals at the same time, right? So whether we give you, 500 or a million or anything like that, it will, you're going to be able to do as many deals as you can fit on that line, on that amount approved for you. Okay, so the limit to start the 500,000 and go up to $10 million depending on your experience. Okay, so you pay interest on what you use only, okay, not on everything, and not your total approved or exposure limit. And individual and business approvals are continuous, so not per property, for a faster transaction. Okay, so that means that once we set up that line, is just easier. We're gonna get all your paperwork from the beginning, so that way we're not gonna be asking you for the same thing over and over and over every time you want to buy a property, right? So we're gonna have everything on file. You're gonna be all set on that, and you're only going to have to provide us with the new property, the new contract that you're buying, and then we'll move on from there. Okay, so what do I need to get an exposure? What do I need to get an exposure limit to get at that line of credit? We call it the exposure limit, but it's sort of a line of credit for you to be able to do these deals, to do multiple deals at the same time. So to get that exposure limit, we will need the following up front: just track record on your experience, right? So we're gonna set up like a list of things. You're gonna give us a list of properties that you've done in the last 3 years, and we're gonna look at your credit, um, and then a borrower or and business application, right? So meaning that we're gonna put you and your business on the application, so that way we can get you all completely there, so that way we don't have to ask you for any documentation thereafter. Okay, and then a $500 application fee for that, for our underwriters to review all the paperwork. Okay, so this is going to help you get into more fix and flips, right? So our fix and flip overview here is, it will show you how property loans for the renovation of residential non-owner occupied investment properties work. Okay, so optional interest reserves. The rates are low at 6.775 for more experienced investors. Funding is up to 100% of the rehab cost. Property loan level, liquidity, verification we're going to do. Okay, so that's why we were talking about in the beginning about the cash, right? Doing cash versus financing. The thing is that when you're doing cash, that's fine. It's quick and everything, but at the same time, if you run out of cash, is definitely harder to go at that point and try to get more financing. Why? Because all the lenders right now are looking for liquidity. Okay, there's three things that they look for all the time, and they're everyone that you talk with, no matter how much they're funding, or how what's the interest rate or anything, they're always going to be looking for your experience, your liquidity, and where your property is located, and how much of the deal have you been able to complete. So if you get stuck, let's say you started with your own cash and then you run out of money, um, it's going to be difficult, even though there's company that are probably going to be able to do it, but it's going to be very difficult to get you the financing at that point, because you're not going to have any liquidity, and that is something that they don't like. Okay, so it's going to throw your deal down. So for that reason is that when you're doing your numbers in the beginning, on a fix and flip, and you say, well, I'm going to need 100 grand to buy and fix this property, make sure that you have all the costs included in there of, of your carrying cost, right? A lot of investors, a lot of new investors don't count their carrying cost inside their rehab cost, and that's, can get you in trouble, right? So, make sure that you include any expenses for gas, electricity, any maintenance for the property, taxes, and anything that you need to pay. Absolutely everything, even to the little thing. Even porta potties sometimes, things that, in some cases we didn't count on, and the city came out to our project and said, well, you don't have a bathroom here, so you need to have a bathroom for these people, so you need to rent a porta potty. And porta potty are not, they're not cheap, let me tell you. Okay, so they're not cheap, so it's in a rental basis, but it's something that you have to add into your costs too, right? Depending on how, for how long the project is going, and if you're not able to keep a a bathroom on the property. But again, so those are things that, when you don't count into those things, and then you run out of money, it makes it very, very difficult to finish your project, and or to refinance the project, or try to get some money out, right? So, and it's going to delay the whole thing, right? So for that reason is that, even if you have the cash, even if you have 100 grand sitting to buy that property and rehab it, I would say, still, I will still get the financing and keep that cash in reserves. You're still going to need a down payment, you're still going to need, to pay cost, but at the same time, you're going to have, let's say you spend half of that money that you have, but you still have the other half that you're going to have it there for, um, as a reserve, and to be able to keep that project moving. So we're going to talk a little bit more about that a little later. And I'm also going to show you, we also have other type of financing that you can utilize to make sure that your project doesn't get stuck, that you have reserves, that you have a backup to keep moving on that project, right? So that's why, so the loan level, the liquidity verification, the liquidity part of the financing, and in your company, super, super important, right? So the draw balance options is available too. So the drawn balance option is mainly when is the type of the way that you're gonna draw the money for your construction. That is another thing that you have to have in consideration when you're doing a fix and flip, which is, all right, you're buying the property, you get the property, the bank now also is going to finance your construction, let's say, right? Let's say that you're getting 100% of your rehab finance. Okay, let's go with that example. And then that's fine, but at the same time, you have to start that project with your own money, right? So you're going to need cash for that too, or you're going to need some sort of financing to get that started, and then be able to start drawing from the escrow account where we're going to put your rehab money. Okay, so now the amount, the term for these loans, now we extended it. All right, so we were doing, in the beginning we were doing like 6 to 9 months, then we added to 12 months, and now we can go up to 18 months long term, which is great for bigger projects, right? So what that allows you is that, usually when you got to the term of your loan, right, they will allow you, we still allow you to get an extension of that loan, But every time you get an extension, you will get charged an extra point and an extra point. And if you go every month that you're going over is a point and a point, right? So by getting a longer term on your deal, when this is when is a larger rehab, um, it's better to opt for the longer term, even if you don't use it, because there's no penalty whether you you pay that loan before. So, but the idea is that you, just in case you have extra time and you're not going to incur into more expenses to keep the loan in place when the property took a little longer to get done, or it's taking longer to sell. Right now is some of the things that you have to do, and that's why we extended the long-term options. That's one of the reasons why, is because we don't know what's going to happen in the market in the next 6 months to a year. And we can talk about different things, but at the end of the day, it's all speculation. So anything can happen. So for that reason is that we're extending the long-term option, so that way you can have a little bit more time if you need it. If you don't, great. But if you do, it's going to be there for you. Okay. So the maximum experience for these type of lines of credit is that you need to have 3+ investment properties over for in the last 36 months. Again, the individual loan size will be minimum of $50,000, and this is the loan amount. Okay, we're not talking about your purchase price. This is your loan amount. Okay, so let's say if the minimum loan size is $50,000, then your purchase price is gonna be more or less about 75 or 80. Okay, so because you have to take out your down payment. Okay, so so keep that in mind. So if you have any questions, feel free to write it down. Ask any questions you need, or if you uh, like to send me a message, feel free to send me a message for that, or set up a time to talk with me if you're looking to do any of these type of deals. Okay, so the exposure limits, again, this is for the best experience. We can go up to $10 million. Interest accrual is there are options for full accrual on the max loan amount, or only on draw balance. Okay, so the option is right there. Then the maximum loan to value, the LTV that we talk about, standard rehabs are up to 70. These are for the newer investors. Extensive rehabs will be a little bit less than 765. And maximum acquisition financing will be up to 90%, and extensive rehabs up to 85%. So again, this will depend on your level of experience. Okay, so that's why we say that the newer you are, even if you have some cash that you can play with, definitely look into these, and feel free to get in touch with me so we can go over your particular situation, right? So rehab financing also, there's is available too. So we can do up to 100% of that. We want to make sure that you get your project completed. Okay, and there's a couple of different ways to get to 100% on the full deal. So borrower, again, individuals and entities. Obviously, I will. I think the best option possible there is go with your company, and then the eligible properties will be single family, 2 to 4 units, condos, multifamily, and mixed use. Okay, mixed use are usually the type of properties that you have a store and residential too, an apartment or a house or something that is attached to the property. Um, the minimum interest is 90 days. Okay, so that's the minimum amount of time that we usually require. And again, look, 90 days, they go past really fast. And the minimum score that we need for this is 620. But going back into the minimum 90 days is usually by the time that you buy it, you get into the property, you fix it. Let's say that even if you get that property fixed and done in a month, okay, within a month, let's say you're going to be in already for about 45 days. Let's say you put it back on the market on the 45th day since you bought it. Let's say that takes, I don't know, a week or 2 weeks to find a buyer, and then that buyer to get the financing is another 30 days. So you're right there on 90 days. So even for small flips, this works perfectly. Okay. And the minimum credit scores for this type of financing is 620. So can't get any easier than that. So we're going to be talking about some other type of financing that we use a lot that requires a lot more credit history. This is really easy to obtain. Okay, so and I'm going to give you here, I'm going to show you a little bit of an example of a calculation for fix and flips and with a standard rehab, right? So let's say that, let me see if I can use my pen here. Here, let's say that, I don't know if you write something. Okay, no, it doesn't. So here, let me see if I can use my pointer. Okay, here. So let's say that the purchase price is 300,000, and the rehab, well, these are big numbers. Okay, so these are some of the type of construction that I've done before. Sorry, I should have probably put an example that it was a little bit smaller, but just for the purpose of an example, let's say the purchase price is 300. This is another thing that before we go into the this is another thing that you have to have in mind, that a lot of banks um, don't tell you, but usually eh, not every lender is going to allow you to do a rehab budget uh, amount bigger than your purchase price. Okay, so a lot of the lenders don't want to do that. Okay, so they don't like that. They want it to be lower than your purchase price. Okay, so keep that in mind. So, but we don't have a problem with that. So let's say that the purchase price is 300,000, your rehab budget is 400,000. You need about $700,000 to get the deal done. Now, remember, then inside your rehab budgets, we're doing round numbers in here. So inside your rehab budget, you got to make sure you have all the other expenses, your carrying cost included. Okay, so let's say that the ARV of the property, once the property is repaired, the after repair value of that property is $900,000. So the approved loan to cost of that property will be 80%. The approved LTV will be 65%, and the purchase LTC will be 75%. Okay, so the initial disbursement is going to be, out of the $700,000, we're going to do 80% of LTC of that, which is 560,000, right? The loans is based on the total cost that you need. Okay, and then the five from the 500,000, $560,000 minus 400,000 that you need for your rehab cost, um, it will equal $160,000 max loan, um, less the budget, right? So that's your loan, your max loan. So the whole back is going to be 400 grand for your rehab cost. So that's going to be 100% of the budget that you need. Okay. Now the purchase is going to be 160,000 um, times 300 equals 53%, which is which is less than the max 75%. Okay, so in this case, it looks like a lot. Okay, simply because um, the numbers are bigger. The rehab budget, the rehab is bigger than the purchase price, so it affects the loan for the purchase price. When the rehab, let's say, if you only had 50,000, it was 300,000, and you only needed 50,000 to fix this property. Just to give you an example, then you will have 250,000 probably, 200,000, 250,000 dollars here, that it will be financed. It will be close to the 75%, right? So it's a lot. They have a lot has to do with the rehab cost. Okay, so the LTV, um, it will be 560, right? And the ARV 900. So when you have about 60, that gives you about 62%, um, which is less than 65% that we require. Okay, so and that is, that's one example. So the total loan is about 160, right? Plus the 400,000 that um, that you need for your rehabs equals 560. Okay, so your down payment is going to be, um, sorry about this, this thing is kind of coming out. Okay, sorry. So your down payment, um, okay, let me take these out. Okay. Ugh, well, I don't know what I did, sorry about that. Okay, so your down payment is going to be roughly 300,000 minus 160. That's going to be, let me leave that pen alone. It's going to be $140,000. Okay, so that kind of gives you the idea of how we calculate, how we do the numbers, to be able to tell you a little bit about how your deal is going to get financed. Okay, so I have a couple of questions here that I usually get asked about the fix and flip loans, so that I'm going to read for you, so that way, some of these questions may be some of yours, but if your question is not included on these, again, feel free to reach out to me and ask me. Okay, not a problem. So, what's the loan term for the exposure limits? Remember that when the exposure limits equal line of credit. Okay, so we call it line of credit. It's more something on the terms that people knows more. Exposure limit is something that we use internally, right? So, but the individual and the business approval for an exposure limits are continuous. So each property funded on the limits, within the limits, will have an individual loan tied to it, right? So the standard loan offering is usually 12 to 18 months on the terms, but extensions are also available at the lender discretion, in a case by case basis for larger project. So again, so the line of credit is, approval is continuous. Okay, so it will continue until you decide to not to work with us anymore. Okay, so what type of properties? Again, single family, detached residence, single family, 2 to 4 units, condos, multifamily, and mixed use. And multifamily, we go up to 20 units on that. Okay, so we can do more than 20 units, but that will be just a different type of arrangement. Okay, how do the loan to value, LTV, and loan to cost work on these products? So we determine a borrower's maximum loan to value and loan to cost based on their experience level. Okay, so your experience has a lot to do with how much you're going to be able to fund your deals. All right, but funding is always subject to the lesser of the approved LTC and or LTV ratios. Okay, so um, the same thing that we were explaining on the previous page, right? So again, I know that we go through a lot of numbers in there, so feel free to reach out to me, and I'll explain that with your particular deal, okay? Because it's going to be a different number there, right? So do we need access to the interior of the property for inspection and appraisal? Yes. So make sure that we can get proper access. Full appraisal will be required for all the properties, and an interior inspection will also be required before additional draws and disbursement are are done, right? So every time you're doing work on the property, we're going to be sending an inspector there to get to verify the all the construction that you're requesting. Okay, so what are the advantages of applying for an exposure limit or line of credit? It's the speed and the simplicity for you and for us. Okay, so once the borrower is approved for that, it provides a streamlined lending process, so you can acquire and or renovate multiple properties faster without going through a complete borrower review each time you wish to buy a property, right? So once you're approved, we only need liquidity verification, appraisal, and inspection, title, and insurance. But these are, for that particular property, okay? So, and when do you wish to fund on the limit? Okay, so do you need to use a general contractor? A general contractor is only required on extensive rehabs. Okay, generally, when the budget is 15% of the total cost or more. Okay, so if let's say if your property is worth 300,000, like the we see here, and your budget is 400,000, then yes, your budget is gonna require a GC, right? So if it's 300,000, let's say, and your rehab amount is only 100,000, then you're not require one, but you can still use one. So, and then if you are required to have a GC, then a GC review fee may apply for that too. So because we have to review the GC as well. How do origination points work? Origination fees are charged on every property funded on the exposure limit. Okay, so every time you get into a property, you're gonna have fees related to that property. Okay, and we can go over that. So obviously, every time you're buying a property, you're gonna get all those expenses up front. Okay, so you're gonna get a term sheet where we're gonna tell you exactly how much you're gonna be able to lend, and what rate and what fees need to be paid, and etc. Okay, so everything is done up front. We want to make sure that you're clear with everything that you're getting, so that way there is no surprises and no mistakes at closing. Okay, so how does the interest accrual work? Interest on fix and flip loans is a full accrual, okay, but experienced investors may be allowed to opt in for interest on draw balance only, right? And we're talking about on the rehab tool, right? So the thing is that usually, you pay for the interest on the property that you just bought, because that is paid right there at closing. That money is used right there, but at the same time, for the rehab money, for experienced investors, they get the option to pay only on the draw amount. Okay, so how is my exposure limit size determined? So this can vary. It's based on your business strategy and track record again, right? So everything is attached to your experience. So typically, your maximum limit will be based on of investment properties, transaction history on the last 3 years for all guarantors combined. So for everybody, whether you are one person or two or three, four or five partners, so it will be depending on everyone's history, right? So which is that's something um, that is something that you can keep in mind, right? So if you don't have a lot of history, but you're partnered with someone that does have a lot of history, there you are. So we can use, any of your partner's history for that as well. Okay. So is there a minimum usage requirement, or are penalties incurred for lack of use? No. So it's not. There's no penalties for that. So okay. So if you're not using it as much as you thought you will, it's okay. The idea is that it's there, is available for you once you're approved for it. Okay. So now we're gonna go a little bit over bridge loans, and let me look at my clock just to make sure that we're almost there. So I'm not gonna try to take too much time into these. So bridge loans are a short-term flexible loan, also solution, idea for temporarily holding assets. Okay, so like self-funding cosmetic rehabs are allowed up to 25% of the cost basis, but optional interest reserves as well, as is appraisal only. No ARV is required when you do these type of the loans, and is up to 80% of the loan to cost, up to 80% of the LTV for purchases, and up to 75% refinances. Again, these can be done again up to 12 or 18 months term as well. And these are for quick deals that you want to do. If you're looking to buy a deal, you have to buy a deal, but then, maybe kind of like a double closing type of thing. You can use it for that. You can use it also for rentals that you're buying once you have but the property is not occupied, and you need to put a tenant in place. But then before you do that, you need to do some cosmetic stuff to get it ready, some painting, clean up carpet, stuff like that, and then you put your tenant in there, and you can get your long-term financing once you get your tenant. The thing is that sometimes a lot of the lenders out there, sometimes when you're getting rentals, they want to see also that you have some experience on that to get long-term financing sometimes. So these sometimes will help you get that in place, and then once you get that term in there that you need, you can jump into a longer term type of financing. Again, these are for the maximum experience on these type of loans. Again, they require three or more. If you don't have the three deals, that's not a problem. Just let me know. I will get you a different program. But obviously, to get the maximum out of these type of programs, if you have a three properties or more done in the last 3 years, that's definitely helpful. Okay, and the same type of loan size, 50 to a million. And exposure on these lines of credit also can be from 500 to 10 million. Okay. Um, Again, just a quick example for this, it will be, if you have a property that you need to purchase for 500,000, and the assessed value of the property is 550. The approved loan to cost will be 80% of that, and the approved LTV would be 75. That means that 80% of that will be 400,000, and the LTV calculation will be 75. So it's still 400,000, right? As long as the property is worth 550 in this case. Okay. Again, let me remind you, if you don't understand this or you have any questions about this, feel free to post your questions on this video, or either in Facebook or YouTube, and I will respond that to you. Okay. Now, again, some quick questions about bridge loans. Will the cost of cosmetic rehab be included on the loan? No. The bridge loans are just simply for you to be able to acquire the property and hold it there for a short period of time, whether it's up to 12 or 18 months. Okay. So the any light rehab or any cosmetic stuff that you need to do, it's going to be on your side, and it's only these type of loans are only for those type of properties that need very little, very light stuff, very cosmetic things. They can be only up to 25% of the cost of the property. Okay, so do you have to provide a budget for any rehab? If you're doing any, yes, a budget is required. So underwriting will use it to verify that the scope of the rehab is cosmetic only and does not exceed the 25% of the cost basis. Okay, so why would I choose a bridge over a fix and flip loan? Bridge is ideal for holding assets, all right, that either require no rehab or only just cosmetic stuff like rehab, right? That you're able to self-fund it, that your company is able to take care of that by itself, that you don't need that extra money. If you need the money to fix the property, then we gotta go with the fix and flip loan, okay? And then there is also no extensive there's also no rehab escrow, fund control, or draw management involved, so there's less expenses too. And we only need an assessed appraisal for the property, so just to determine the assessed value of the property, right? If the rehab is more extensive, like we mentioned, you would need to finance the rehab cost, and the fix and flip loan would be the way to go. Okay, so do we need access to the interior of the property for inspection and appraisal? Yes, a full appraisal will be required, but no additional appraisals will be needed. So just with one is enough. Can I use a bridge loan to pay off my current loan to another lender? No, that's not the type of loans that it is. Bridge loans are not intended as a bailout and must have a clear exit strategy for that property. Okay, so that's it in regards of that type of loans and the type that type of things that we do. Now we also let me show you something. Let me take that out. And we also work with unsecured credit, unsecured lines of credit for your company, and also term loans. Let me see if I can get this shown in here. I'm not sure if I can, but let me see if I can explain, so that way I can explain that to you. So the way that we use term loans and business lines of credit to be able to help you with um, some of these projects too. Okay, so I'm going to share my screen, just the entire screen. No, but I'm choosing Chrome tab. No, application window. Okay, let me see if I can do it. No, this is not working here. Give me 1 second. Sorry about that. Let me see if I don't see the screen. Um, okay, let me see if I can share this, and then I put this. I'm not able to. Sorry. So I didn't prepare for that. But again, so we talked about the fact that we can do um, that you're going to need about anywhere from 15, 20, 25% for these type of loans, for a fix and flip loan, and for a bridge loan. Okay, so now how do you get that type of financing to maybe finance that side, that other piece that you need? Is we do it through business lines of credit or through term loans. business lines of credit and term loans, those are unsecured tools that you can utilize to in combination with these other loans to be able to get your deal completed. Okay. At the same time, we mentioned that if you're doing a fix and flip loan and you need to start your construction with your own money. So whether if you have the cash to do it, great. If you don't, then we can jump into term loans and business lines of credit. Business lines of credit, I think, in my opinion, I believe that are a great tool for any business. Okay, so and I think that you should definitely, if you're starting or not, or if you're been in real estate now for some time, I believe that you should have lines of credit in your business, whether you need it or not. Okay, so because that those business lines, they allow to your business to create a business credit history. Okay, and we know that the same way that we create credit under our personal names, companies create credit under theirs. So the more history, the more credit history that you have under your company, the more access you can get access to more money in the future. Okay, so the idea is that you have to start building on both sides. Okay, whether you need it in the future or not. But I think that every business should have that. So definitely reach out to me, and I can explain that to you and go over more in detail how business lines of credit work. And I can show you how we can get you right now is super. It's great to get out to $250,000 in business lines or term loans. Okay, so we can get you up to $250,000 in as little as 7 to 14 days. Now, these type of lines of credit or term loans are unsecured tools, so they're a little bit more difficult to get. Okay, some of the things that you have to keep in mind is the scores, right? Your credit scores for fix and flip loans and bridge loans. We just mentioned that you only need about um, that you need about 620 credit score for those type of things, because those are secured by your real estate. Now, business lines of credit and term loans, they're unsecured, so they don't need any collateral. For that reason, they do require 700 plus credit scores and a great credit history. Okay, so but again, it doesn't have to be under you. It can be under your partner or anybody that works with you, or your wife, your husband, your brother, your father, your mother. Anybody that is willing to apply for your company can get access to these type of things. And again, it will be on the name of your company, so it will still your company will still get the benefit. Okay, so feel free to call me. Here's my phone number, 847-220-7247, and let's talk about your particular deal. Let me analyze it with you. I love to analyze deals, and I love to go over with you, so that way you can learn more and more how we look at the deals. When you get the hang of looking the deals, the way that we lenders look at deals, you're going to be able to make better decisions when you're buying properties. Okay, when you're looking at properties, you say, well, I need this much to fix the property, I need this much, and blah blah blah. But when you look at it from our side of it, then you're not going to have any issues when you need the financing. You're not going to get any surprises. You're not going to forget about this or forget about that. So I'd love to help you, and I'd love to teach you as much as you can, as much as we can, to for you to be able to be more successful when you're looking at deals and when you're putting more deals in your pipeline. Okay, so again, feel free to give me a call, 847-220-7247, or go to getunsecuredcredit.com, and you can set up an appointment right there to talk with me, and I will give you a call. and we'll talk about your personal deal. All right. Again, thank you very much. I appreciate everyone that looked at the watch our show today, and at the same time, if you're watching the replay, again, I thank you. Please like and share and send me any of your questions. I will be glad to answer them. All right. I'll see you next week. Goodbye.